and diversify with gold and silver with Monex Vice President Mike Maroney, along with Managing Partner of CPM Group and author of the Monex Precious Metals Market Outlook Report, Jeffrey Christian.
Hi, my name is Mike Maroney, and I'm here today with Jeffrey Christian, the Managing Director of the CPM Group. Each month, we do a brief video to talk about the conditions that exist in the precious metals that affect the price. Well, first of all, great being with you today, Jeffrey. How are you?
Very good. It's good to be in July, yeah?
Yeah, it certainly is. It's a wonderful time of year. Now, interestingly enough, the last time we did a video, Jeff, we were up in the 17s, and at that point, you felt that the metals, both silver and gold, were getting a little bit toppy, and thought that silver could potentially test the 1580 area, and that gold could potentially test the 1240 price zone. And sure enough, we pulled back in silver down to 1574, and gold hit an intraday low of 1238. Now, since then, we've seen a little bit of a bounce back to the upside. Gold today went as high as 1264, and silver in the spot market went as high as 1617. Now, obviously, we have the Fed coming up. We have a lot of different economic announcements. But at this point, Jeff, do you feel that the metals are out of the woods as far as the correction is concerned? Or do you still believe that a potential buying opportunity may sit out on the horizon?
We are concerned about the weakness that we've seen. Yeah, we expected the prices to come off. They were a little bit weaker than we thought, especially in gold. And we think that you're now in July and August into a period of seasonal weakness for investment demand, fabrication demand, and the prices for gold and silver. And we think that's going to continue. We think that July and August will see prices sort of tread water. Gold may be a little bit weaker than silver. We wouldn't be surprised to see gold come back and test those lows that we saw a couple weeks ago. Silver, we may not go back to 1580, but we don't see the prices running away on the upside or the downside in the next few weeks. We do think that the prices will start to rise and that September and October will see higher prices as investors come back into the market as well as fabricators. But for the next couple of weeks, we think that the prices sort of move sideways. And yeah, as you put it, there might be some very interesting buying opportunities in gold around the recent lows, and in silver around the recent lows or around current levels.
Now, obviously, a lot of people have watched the dollar. The dollar popped up. The Dixie hit a high of around 95.60, and we've since broken back below 94. I think, if I'm not mistaken, you still feel that the dollar has a little bit more room to the upside. Is that correct?
It has a little bit more room, but I think you've probably made a lot of the upside. And, it's this bitter irony here. Part of the reason for the strength in the dollar is concerns over the trade war, which is being trade wars, which are being inspired by the U.S. government's saber rattling. And so even though it's the U.S. that's threatening to create trade wars with Europe, China, South Africa, Brazil, Canada, Mexico, you see people rushing to the dollar partly for protection against the potential negative economic consequences of a trade war, both in terms of real economic activity and the potential that it could really hit the stock market in the United States and elsewhere. That said, we think that most of the trade war-inspired gold interest or dollar interest is behind us now. So I'm not sure that the dollar has too much more upside before we see it peaking out and maybe moving back down a little bit.
So in essence, then, what we're looking at is, one, we're in the summer doldrums, and two, the dollar has maybe hit its high and could be bouncing in between this 94 and 95.5 area. And maybe, if we're fortunate enough, we could see another pullback, which could potentially give investors an opportunity to position themselves in silver below 16 or potentially in gold below 1250. But as far as your mid-range or longer-term views on precious metals is concerned, you're still bullish as far as the last quarter of 2018 and the beginning of 2019. Am I correct in that assumption?
Absolutely. I mean, if you look at gold at 1264 as we're taping this, yeah, it is possible that you could see the gold price $20 lower at some point over the next few weeks, and it'd be a really tremendous buying opportunity. But I think that even if you bought today at 1264, by the end of the year and into 2019 and beyond, you'll be making money on your gold position and you'll be happy to be in there. And the same is true with silver. You can wait to see if we come back and test 16 and maybe move back down to $15.80, $16 range. And that would be an absolutely wonderful place, we think, to get into the market. But from a longer term investment perspective, even 16, 17, 16, 15, 16, 20, where we've seen the price today, probably is an attractive level to buy silver.
Now, a lot of people were talking about gold's key resistance level being right around that 1350, 1370 area. And obviously, silver hasn't been able to really get above that 1750, 1780 price zone. But you do see the potential for both of these metals possibly testing those ranges again in the near term, in the next 3 to 6 months, and maybe even breaking above those price levels?
It may take more than 3 to 6 months, but we do think that you will see the prices above those levels. And I think that when the time comes and, silver's risen to test 1750 and gold's risen to test 1350, I think that the prices will probably break through them very easily, because the economic and financial and political environment will probably be much worse than it is today. And investors will be much more eager to have exposure to gold and silver as a safe haven and a portfolio diversifier.
So the ironic situation that currently exists is the U.S. is creating an environment where we have a trade war, but currently we've actually seen investors flock towards the dollar, but that shift probably we shift back to a more safe haven policy in gold and silver in the fourth quarter of 2018 as investors realize that the safety in the dollar isn't the right place to be?
Yeah, the value of the dollar is its liquidity in the world. And it's far more liquid than any other currency and most other assets. And that's why you're seeing the dollar strength right now. But the reality is that these trade wars and other policies that we're pursuing probably are more negative for the U.S. economy and U.S. business in the long run than they are for the rest of the world. So that beyond that initial impulse to rush to the dollar, when you see these things emerging, beyond that initial impulse, we think the dollar comes back off as investors seek to rebalance their portfolio on a more global basis.
Well, they say the trick to making money in any market is buy low and sell high. So this environment right now, as both gold and silver look to be forming a very solid base, in your eyes looks to be a great long-term buying opportunity, correct?
Bernard Baruch was asked how he made his money, and he said, I buy straw hats in September and sell them in May. And I think that, gold is probably going to be like that. I think if over the next couple months, people aren't going to be buying gold because it's summertime and there's seasonal weakness and they're not sure where it all shakes out. But as the summer gives way to the autumn and we move toward the election period and we have various other political issues there, I think you're going to see a topping out in the economy and increased concern about potential recession in the United States, and that's going to hurt the dollar and it's going to stimulate or rejuvenate investor interest in gold and silver. And let me just say this, if you look at central banks, who are a type of investors in gold, central banks in the first 4 or 5 months of this year bought 4.4 million ounces of gold and sold about 400,000 ounces of gold. In other words, central banks as a group bought 11 times more gold than they sold in the first half of this year. they see the value of gold.
So obviously, if the individuals that control the central banks that control the world's money supply, they're buying precious metals, they seem to understand what sits out on the horizon. So I would look at this and say, it's probably not a good time to wait to buy. It's probably a good time to buy and wait.
It really depends on who you are. But yeah, we always advise our clients, don't try to get the last 10% on the downside or the last 10% on the upside. And as I said earlier, I think 1264 will look like a good price to have bought in a year from now or even 6 months from now. If you wait, if you have the stamina and courage to wait, you might be able to pick it up lower. So much the better for you. What we tell a lot of our clients is to average in. So if you're wanting to buy gold today, but you think that the price might move lower over the next few weeks, buy some today and look to buy more either if the price starts to fall, or if the price stays the same, or if the price moves up. So if you're looking for a given position, put half of it in place to today's price, and then wait to put the other half in until you see some motion in the gold price.
Okay, well, fantastic, Jeff. Well, let's see how these summer weeks go. We'll be talking again next month as far as our video series, Diversify with Gold and Silver. Great talking with you today, Jeff, and we'll talk again in August.
It was a pleasure. I'll be here or somewhere, and I'll talk to you in August.
Have a great day and enjoy your summer.